Can you hear me? Yeah.
All right, how about now? Oh, what the hell is going on here? So you can't hear me?
Let me check something. Hold on a second.
Record now. I'm going to bring this up. Advanced. Motion share.
Do you have anybody waiting?
Yeah, as far as I know, they're just going to join in.
Oh, you didn't set up a waiting room?
No, I never set up a waiting room. I always let people join in whenever they want.
Okay.
All right. Let's set this thing up. You can see just the screen now, right?
Correct.
Perfect. Okay. All right. So we had technical issues getting started there. Should be back online now. Everything is fine. Here we are. It is Thirsty for Knowledge Thursdays. That is our weekly webinar series brought to you by the Ares Foundation for Financial Education, Inc. And something that Craig and I like to refer to as Think with a Drink. The Ares Foundation, our goal is trying to help everyone have a better relationship with their money. Let's make just sure that you're on the right flight for this evening. Tonight, we are talking about organizational types for small businesses, smart tips for getting you set up right, whether you're running a business currently, thinking about setting one up, or as most of us in this COVID world might have, that side hustle or a gig economy. All right, little pre-flight checklist before we get started. We got all the microphones are muted. Your cameras are turned off, hopefully. There is a chat box, so if you do have questions during the presentation, please feel free, ring out, ask questions. My co-pilot, Craig, is going to be, and I'll introduce him in a second. He's going to be monitoring that. He keeps me on task, keeps me on point, and makes sure that I stay on pace here, but he'll also bring up those questions as they come in. Speaking of your pilots for tonight's flight, I am Tom Alessi. I'm the president of the Ares Foundation for Financial Education. I have been in financial services now in my 21st year in the business. I am an investment advisor, which means that I act in a fiduciary capacity. I am licensed to do so when dealing with any of my clients and their investments or holdings. Craig, why don't you come online for a second, introduce yourself.
Sure. So I'm Craig Richardson, Vice President of the Ares Foundation. I've been in the financial services field for about 16 years. And I work with families and small businesses to help them put together a personal financial plan so they can achieve their future goals.
Tremendous. Appreciate that. Like I said, Craig is our co-pilot for this evening. He's going to keep us on task, and he will be chiming in every now and then because he's got some of the information as we go through this for some of this topics that we're talking about tonight. As we said, this is a weekly webinar. It's brought to you by the Ares Foundation for Financial Education. You can visit our website to learn more about us at aresfoundation.org. As I said, the main goal of Ares is to help everyone have a better relationship with their money. But our belief, Craig and I, our impetus behind all of this is that we believe that financial wellness is a contact sport. That means that there needs to be guidance and engagement that goes along with all of the planning, the tools, and the software that's available out there. Because if there's not that guidance, then they're not participating. And what you're not getting is enrollment and activity in those financial wellness programs. A couple of disclosures before we start the presentation. This presentation is meant to be purely educational. The information it expressed is meant to be used for that. The Ares Foundation for Financial Education, Inc. is a nonprofit. So any of the presentation, any of the information that we're sharing with you, and we make them available, they're on our website, they're on our YouTube channel. You can go and visit them to find that. They are meant just if you do that, that you share it, that you use it for educational purposes only. The Aries Foundation is not a broker-dealer or affiliated with any securities-related business, and it is not a registered investment advisor. The Aries Foundation for Financial Education, Inc. always, and we say that always, Craig and I will tell everyone that if you have questions, whether they are tax, legal, or investment, that you seek out the help of a professional and ask those questions. And what do you know, there are drinks on our flight this evening. And for us, this tonight is a nice one for me. This is, this is Jack's Abbey. This is what the hell's is a land beer, as they like to call it, right? So it's a Hell's Lager from one of the happy places in my universe, which is Jack's Abbey Craft Lagers in Framingham, Massachusetts. This lager is a sweet and golden. It's got a full malty body, and it's inspired by the country lagers of Bavaria. So it's a pale beer. It's also the house lager. So if you ever get a chance, if you're ever in the area, Craig and I always try to stop by. We suggest that you stop by, if you get a chance, and indulge yourself by visiting the brewery in Framingham, Mass. Craig, what are you drinking this evening?
I actually have a Jack's Abbey too. It's a blood orange wheat.
Oh, very nice.
Also a lager.
Well, Jack's Abbeys are all lagers. If you want an ale, you have to go next door. That's their other brewery, which is Springdale. So for anybody, we're part of this, we like to give the information out. We like you to be relaxed, enjoy yourself. So we always say, pour a cold one along with us. If you can't or don't imbibe, find something that's refreshing that you enjoy. Occasionally, Craig will be dipping into his Lipton iced teas in joining us. But want to just raise the glass and say skål.
Oh. So it's going to be a rocky flight because both pilots are drinking tonight.
Yeah, it's always a rocky flight with us. Right, so what we're talking about here is organizational types and considerations for small business. This is what we mentioned that we want to go through, right? And so, one of the things with this is talking about the characteristics, the advantages, disadvantages of each of these organizational types, and we'll touch on them each individually, but we'll go through them all again with this. But you've got, sole proprietor, partnerships, LLC or limited liability company, a corporation, whether that's a C Corp or an S Corp, and we'll break those down, each one of these, as we go through it. But one of the things you should be asking yourself is, what do you know? And more to the point of, if you were sitting down and saying, gee, I wrote out each one of these, a sole proprietor, partnership, LLC, S Corp, C Corp, what do I know about each one of these right now? And if you're looking at, setting up a business, or like we said, maybe you're doing a gig economy, it's starting to take off, you got a side hustle going, and it's something that you're thinking about, what are those questions that you have about each one of these setup? And if you don't know a lot about them, that's what this is for, but also give you a little bit of guidance and some place to go.
So like if I'm selling bracelets through Etsy or something like that?
Whatever it may be, right? And part of that, I forgot to mention, and thank you for reminding me, Craig, I'm going to take another sip while I do that. This is really a follow-up to, we did Small Business Survival Guide a couple of weeks ago, where we interviewed a couple of small businesses. One of them is our wine consultant. That's Erin Bowes from Scout and Cellar Wines. Holiday time coming up, you ever need anything, always, reach out to Erin. She can help you out. Scout and Cellar / Erin Bowes. You'll be able to get a hold of her. But Erin had questions because that was sort of started as a side hustle for her, right? That's now bloomed into something where she's got to have some considerations and some thoughts. And so this presentation sort of bore out of some of the questions that she was asking about what should she do? Should she stay a sole proprietor, or should she look at other types of business? And that's really just coming out of what you just talked about. You selling something on the side.
The Aries Foundation does have our own personal wine consultant.
Yes, we have our own. Yes, we need that. We need to get a beer one now, so we have a wine one. That's put it on the list, right? All right, so the organizational types that are available, right? We just mentioned them. They're called legal structures, and we'll go through each one of them when we look at it. Sole proprietorship, partnership. Partnership comes in many forms: general, limited, and an LLP. Excuse me, limited liability company, that's LLC, and then the corps, S and C corp. And what each of those is going to represent and break down as you start to go through this and have consideration on it. All right, so let's talk about factors for choosing an organizational type. Taxation, right? So taxes are always a big thing, Craig. That's always one of the things that we always want to talk about, right? Who's paying the taxes on the return? You know, what makes the most sense for me as the individual? Do I want to pay it, or do I want to have the company or the corporation pay it? Risk and liability, and I think this is the biggest one, right? You know, you can protect yourself to a certain level, but then you need to bring in, hey, can I offset and have just the company be responsible for any of the liability? And we'll get into a little bit of that with some of this in the breakdown of how that works. But, you know, that's the harm to somebody else, or in the case of, you know, getting sued or contract disputes, right? If you didn't deliver on something, what can happen? Management, this is more about, you know, if you've got other people involved, well, it's not necessarily then just you, right? Then there's other people who are making decisions. You know, one of the things with a sole proprietor is you're always the person who's making the decision. But now you bring on a partner, now there's two people. If you bring in a corporation, there might be more people. So management and decision-making authority, a lot of times that's one of the things we don't want to ever give up. Continuity and transferability. So this just talks about, you know, my exit strategy. How am I going to get out? I want to build this thing up so that I can sell it at some point, maybe, or gift it to, you know, send it to the next generation or somewhere in there. How easy is that to do if that's part of the game plan? Those are one of the questions that you have to ask yourself. Where do you want to be with this thing? And then expense, and we'll talk about that, you know, because believe me, all of these things cost money to set up. And they've got legal responsibilities that go along with them. Some of them simple, some of them very, very, very complex. And depending on what you're trying to accomplish, whether or not you need to follow through and deal with all of that. All right, so let's start with, did I go to the right screen? Sole proprietor, that's what's next, right? So that's the simplest. You know, at its core, basically, anybody who says I'm in business and running a business by themselves is a sole proprietor. So just about every, right, Craig, as far as it, like every gig economy starts out as a sole proprietor. Every Uber driver or Lyft driver or anything like that, they're all sole proprietors to begin with.
Yes.
And there's no legal distinction between the business and the owner, right? They're one and the same type of thing. So, you know, the advantages and disadvantages, well, certainly unlimited personal liability. Like anything goes wrong, anything happens, you're on the hook and you're going to have to make do or make up for any of that problems that occur. You know, in taxation, right, it's a pass-through. So any of the taxes that get earned are on your tax note. There's no breaks, there's nothing. It's your tax that's getting paid, right? You know, the business doesn't file a tax return. If you're operating otherwise known as DBA, which is doing business as, you're still a sole proprietor, but you're doing business as an entity. That entity does not pay taxes, you're paying the taxes, right? That's how most sole proprietors are. You know, it usually helps if you're going to stay on top of your taxes to do a quarterly estimate, just so you're aware of what you're paying or what you need to pay from tax point of view. Craig, how many times do we run into people where it's, you know, they don't know and they're scrambling around at tax filing time trying to deal with it?
Most of the time, absolutely. Um, Unless they've been doing it for a few years or they have, a qualified accountant working with.
Right. You know, and the liability and risk, you know, the owner is pretty much, like we said, you know, everything is on you. Any
Yep.
risk that happens, any liability that occurs, that's on you. Um, you know, as far as the transferability, right, in that part of it, you know, a sole proprietor, it really lasts as long as the owner is there,
Yep.
unless the business gets sold, right? So if you pass away, then, you know, without having any type of continuity plan in place, guess what? The business ends. No more business. You can sell the assets, but generally that's not what happens. Um, and then the expense, you know, of setting it up, it's really the simplest way of doing business. You know, that's what's on there.
Oh, it's
The,
nice.
yeah, I mean, there's really not much here in the state of Massachusetts where we are. You know, it's like $35 to set up to go through.
Oh, so,
Um,
okay, yes. Mhm.
right? There's really not much to it, and you don't really have to file anything. You don't have, there's no corporate meetings or board or anything that goes along with that. It's pretty straightforward that, hey, I'm doing this and I'm in place, and that's how most operate. But then we get into, you know, looking at the next phase, which is a general partnership. And that's the association between two people, right? There's two or more people and you're trying to do business and make a profit. Like a sole proprietorship, partnerships have passed through taxation, so there's still none of that business entity being involved. You as the individual are paying the taxes on it. You know, you can create it with more formality, if you will, because there's now two people that are involved versus one. So this gets back to that decision making and management part of it, right? And you really need, you know, Craig, I don't know, is there a legal like agreement or partnership piece that comes into that?
Um, there can be, doesn't have to be.
Okay, I get it. Right. So that if you want it to be, you can, but does it make sense from a greater standpoint to say, look, it might make sense to have, look, here's how we're going to go forward, or some sort of basis for that? Like, this is the
But
game plan, this is what we want to see happen.
this is what I found working with a lot of small businesses, especially partnerships, is that almost everything goes in as a handshake because you're starting either with a friend or a family member or something along those lines, and everybody goes in with the best of intention. The problem comes up later on when the business does well, or the opposite, you have a personal liability, and you're going to say, "Well, I thought you were going to do X, or I thought you were going to do Y." And there's no formal agreement to go back on. So, so it really makes sense that if you can say and agree to it, put it on paper, put it in writing.
Right. Yeah, and that's the whole thing. It's create that partnership agreement. I absolutely agree with you that that's one of the things that if you're going to form a partnership, that you should definitely have that set up as part of it. So that I think, you know, at its basic, Craig, that a lot of that is just understanding what the roles and responsibilities are.
Oh, absolutely. Right. Yep.
You know, and defining where things are going to go, you know, and how that's going to work, you know, and so, you know, there are, like everything else, there are advantages and disadvantages, right? You've got, you know, limited partnerships and limited liability partnerships, and you know, the way those are set up, that gets a little bit more, you know, formal and organized. And again, it depends on who's participating, who's involved. In
Well,
the case, sorry, Keg, I just wanted to finish that thought, because in the case of an LLP, that's usually for a licensed practitioner.
right.
A lot of times that'll be, you know, like I know anesthesiologists and those type of things, they tend to have LLPs as far as clinical
Dentist
psychology.
sharing an office, that type of thing. Right.
Yeah.
But like here, you have general limited partnerships. Where in a limited partnership, you may have where you may own the business and be the general partner who runs the practice. You may have investors who have a limited partnership. They have no say in the running of the practice, right?
Right, and is that something that then would be part of the agreement, right? That would be the
Well,
step.
absolutely has to be part of the agreement because their liability is limited to their investment, while your liability is not limited as the general partner,
Oh, okay.
right?
Yep.
So I go to you and say, Tom, I got a good idea for a business. You want to support it? We'll do a limited partnership. That means I'm going to run it, but you're going to give me the money to get started. Then we agree on how the profits are shared.
Right, and then figure it out from there and go through it. And then my sense liability is whatever I invested into it, that percentage of it.
Cap your liability on that.
Right. Okay. Yeah, that's great. All right, so LLC, the limited liability company, right? So this, I think, is sort of like we were talking about with Aaron, right? As sort of the next phase, the next step for somebody in that gig economy or who's been doing a sole proprietorship and it was a side hustle type of thing. And wait, now I'm starting to make money and it's starting to be good for me. And, you know, should I continue as the sole proprietor or should I try to offset some of this liability that could be, you know, out there in terms of it? You know, it's similar to a corporation, an LLC in a ways, you know, and it's sort of set up like that, like Craig described the general partnership sort of ruling, but you know, it truly does act like a sole proprietor in more ways than not. You know, it's sort of an, as they call it, an unincorporated association, right? So it's not a corp when you deal with it, but it is a business entity. And similar to a corporation, though, you know, owners, they've got the limited personal liability for debts, actions, and of the business. But then everything else sort of acts like a partnership or a sole prop, right, Craig? Because it's passed through with taxation and everything else.
Right. Actually, everything, yeah, it goes through at your personal income rate. There's no money retained inside the business, like you say, in a C corp or something like that.
Right.
It passes through. The only issue is that all the money that passes through, you have to pay the taxes on. So payroll taxes.
Oh, so all of it has to be payroll.
It all has to be payroll when you go through
See, so there's one thing. So, you know, little tax lesson here, boys and girls sitting in the audience in terms of dealing with that, right? So anything that goes through payroll is taxable, regardless of where it goes, with payroll taxes. And those payroll taxes, as a sole proprietor will know, is, you know, about 15%, right? Because you've got to pay the FICA and everything else on both sides. And so that ends up being about what, 15.3%, I think is what it is right now. You know, that you're paying in payroll tax. And you know, it doesn't matter. Even if you plow the money into a retirement account, you're still paying a payroll tax on it. So there's no way to hide that.
That's before your income tax for the state.
Right. Yeah. Okay. Yeah. So that is one of the things with that. And what does it cost? It's like a couple $100 or something to set up an LLC?
Some states it's as low as $40. And Massachusetts is actually the highest at $500.
So it's $500 for an LLC.
Right, but if you open up in Kentucky, it's only $40.
So if we move, that would be a good thing. So there you go.
That state, yes.
So now, so there's, you know, so that I think was one of the conversations, and I keep bringing Erin back into the conversation here. Again, she's our wine consultant, that's why. But that, you know, that was one of the concerns, where do you draw the line to say that this is worth it to me? I've gotten to that point. Now I can pass off the liability issue, but it cost me $500 to do that.
Some of the suggested that I've seen out there is when you're making about 60 to 70,000 in income, that's a good time to pull the trigger on the LLC. However, you also got to consider the liability portion. And she is our wine consultant. I don't know if there's additional liabilities that come with being in the wine business.
Right. So in her case, whether we're getting hangovers or not, because she's promised us no hangovers.
You said no
You
hangover.
didn't say that, right? No, no, she can't say that. We can, right? It's going through that. Yeah, no, we joke, we have fun with her, but that's the idea, is that the conversation was, how does that work and how does it make sense? All right, so a corporation. Now this is corporation, not LLC, a true corporation. And in this case, we're not going to bring the other letter in there. There's two letters, there's C and S. This is really about the C corporation, right? And where the C corporation, it's a legal entity. It operates separate and independent from the people who own or run it, right? It's literally, it's its own being in that situation. This means that the corporation itself, not the shareholders that own it, is held liable for any actions or debts that incur, right? That's the idea here.
Yep.
You know, and it also has the ability to enter into contracts, so the corporation itself is taking responsibility, and the corporation is responsible for the payment of any taxes that occur.
Correct. It's also subject to, C Corp is actually subject to dual taxation.
Well, so we're going to bring the C Corp in right now. You jumped ahead of me, but that's okay. You're the co-pilot. You knew what was coming. There's a good thing there, right?
It's on the radar.
So there's the C Corp, right? So and that's I think most people, when they think of a corporation, they think of a C Corp. And, you know, the term on the slide there says, hey, that's known as a regular corporation, right? And this is the most common form of business for larger companies, right? Unlike a sole proprietor or partnership, these corporations, they're separate and distinct from the owners in the eyes of the law. They are a separate piece unto themselves. And so as that separate entity, right, the corporation can, you know, have what you call it distinguishing characteristics, right? As far as that, you know, that limited liability, transferability, if there are shares. Now, does a corporation, does a C Corp have to issue shares?
It does not have to issue shares. An S Corp does. I don't believe the C Corp has to issue shares.
Okay.
The nice thing about a C Corp, though, you know, why you want to be a separate entity, one, because you talk about the liability issue, which is, you know, the same. S Corp and LLC also protect from liability. The issue, though, and where it comes in and says dual taxation, is that an S Corp and LLC cannot retain earnings. They can't build up cash, right?
Yeah.
So they have to distribute. It has to be taxable. Where if you have earnings in a C Corp, they can be just like a 401k, where you can defer paying the tax on that because you can retain it. It's called retained earnings or owner's equity.
Okay.
Right?
Yeah.
So last year, I think they were saying that like Amazon retained $80 billion in earnings. So they didn't distribute those out as distributions to the shareholders. They held them as owner's equity.
Okay.
So if you're a business and you want to, let's say you start a small business, you see yourself expanding or starting a franchise or, you know, needing capital, then you can retain capital in a C Corp. You cannot retain capital in S Corp or an LLC.
And that is part of that distinction, right, where it is. And the other part of a corporation, you know, sort of the disadvantage when you come right down to it is that it's complex in terms of ownership, but also management. Like we talked about, you know, you could be the CEO, but there's other people involved.
Right. Yep.
And so that brings us to the next letter in the conversation, which is the S Corp, right? You know, this is an election that you make. You decide, I want to be an S Corp, right? And the idea here with the S Corp is that I'm taxed just like the sole proprietor, right? It's passed through to me.
Right.
But do I offset my liability here? That's one of the questions that we keep coming back to with this.
You did. I did take a look at that, and it is, you are limited to the liability of the assets of the S Corp.
Okay, that's one. Yep.
Um,
So that makes sense, right? In terms of dealing with it. So if you were, and I don't know if there's a level that it makes sense. Is the S corp cost the same as an LLC to set up?
that's actually because you're already paying, because you have to set up the LLC or the C corp first. There's no fee to change, because the S corp is just a filing status as far as federal taxes go. So there's no additional cost. The issue there, once again, with an S corp is it's more closely held, so none of the money you can't retain earnings. So what's nice about that is you don't have double taxation. You're not taxing the corporate earnings and then taxing what you're getting paid, like in a C corp.
Right.
The other advantage, unlike an LLC, is that you
You cut out.
salary.
Yeah, we lost you there for a second.
In an S corp, you have to pay yourself what we call a reasonable salary. All right. So let's say you had that business we talked about, 60,000 a year you were making. Well, in an LLC, the whole thing has to be payroll, and you got to pay payroll tax on the whole 60,000. In an S corp, you could say, I'm going to pay myself $40,000, and you pay payroll tax on the 40,000. The other 20,000, I'm going to pay myself as a dividend.
Right.
You pay income tax on that, but you're not going to pay payroll tax.
Correct. You're going to avoid the payroll tax portion of it.
Correct.
And again, just to bring it back and talk about that, that's one of the things that we sort of try to talk to everybody about, is that realize that payroll tax gets paid on everything except for that. So even if the money went, and as Craig said in that scenario, like say it was, I didn't do the dividend part, I paid myself 60,000, but I took the max and put, because I'm over 50, 26,000 into my 401k, I'm still paying the 15% FICA. I'm still paying that payroll tax on the 26,000 that's going into my 401k plan.
Right. You got to remember though, there is a double-edged sword. You reduce your payroll tax, that's great, but if you pay less in the Social Security, when you go to collect Social Security in retirement, well, it's going to be based on a lower earning ratio.
Right. If I paid myself the dividend.
Correct.
Right.
Yep.
Yeah, and again, so that it's not so much a conversation for that 60,000 earner, but it's the conversation for the $150,000, $200,000 earner in terms of how we can offset that and keep it that highest earning rate.
Correct. Yeah. I mean, like I said, it's always a balancing act you have to play one against the other. I mean, even like I've seen a lot of sole proprietorships that, they will show very low income because they can write off a lot of their expenses. The double-edged sword for that is you go to get a business loan and you're not showing any profit, right? So it makes it more difficult. So you really got to weigh the pros and cons of, do I pay tax now or pay the piper later?
Right. And like you said, that's the whole idea, and it's trying to be efficient with it, but it's trying to make sure that you're dealing with it.
Mm-hmm.
So choosing the right structure for you, and this is sort of where you get into the nuts and bolts on all of it. For any business, and it doesn't matter what you're doing, the first thing is you've got to put it down. You've got to have that business plan in place, right? And so, as part of the business plan, as you're going through and starting to think about things and want to make sure what you're including there, besides when you're looking at, where is my market going to be, what the sales volume is going to be like, you got to start bringing into, do I want to just do it myself? Am I going to hire people? Where's my location, marketing strategy, financing? That's all part of a business plan, right? And once the business plan gets set up, then you got to start thinking about, well, this is the whole point about where I'm structuring it and how am I structuring it? Like, who's going to own the business? Right? That would be, whether it's a partnership, whether it's a corp, LLC, that type of thing. Who's going to own the business? Who do I want to own the business? Who do I want to be involved in business with? And this is a big thing for partnerships, because that's one of the things that comes into it that for every partnership that's out there, is that the ability to have a buyout arrangement between the two partners, right? Because if one partner passes away, it's not like all of his shares automatically revert to the other partner.
Unless you have it set up that way.
Right, but otherwise, the other partner's family is now the owner of the company, the other half of the company. And
Oh,
you may not like those people.
maybe even worse. Even if your partnership doesn't break up, what if one of the partners gets divorced?
There you
And if
go.
your business is going to somebody else that you didn't want to be a partner, right?
Yeah. Right. You know, who's going to manage it? You know, does is the service or the product or whatever it is that you're going to do or sell. I think this is the biggest thing. And Craig, that's sort of what you were alluding to with Aaron with this, which was, you know, the product or service, how much liability or how much risk is involved in it.
Yeah, right. If I'm starting a bungee jumping business, then there's probably a lot of liability involved, right?
I would assume so, as far as that is concerned, yes. But that's one of the things you want to be taken into consideration. Like, okay, I don't want to be on the hook for everything, because what happens if the rubber band breaks, right?
Or it's too long, right?
Yeah.
The other thing,
And then how much financing does the business require, right? Do you want to bring in outside investors? That's where you talked about that with the general partner versus possibly doing just a regular partnership. And for the business plan, you always want to talk about growth and how is growth going to be and dealing with everything.
yeah. So before you move forward, because you do have down here research from the Small Business Administration, the IRS website.
Yeah, that's a resource. Thank you.
Yeah, I actually owned a small business in my past life. And what's really nice is the Small Business Administration has services where they can help you to put together that business plan. And sometimes what they'll do is refer you to like a local college or something like that. They can help you put all that together, especially if you're going to be going to a bank or going to some kind of an investor to try to get financing. Help you put the whole plan together because 80% of small businesses fail within the first 5 years.
Right.
And the majority of the reason they fail are two reasons. One, they don't have a sufficient business plan, so they couldn't project, where those issues or problems were going to come up. And two, they tend to be undercapitalized. They think they're going to make a profit far quicker than they actually do, and they don't plan for that, or they don't plan for the growth aspect. So really having that, establishing a firm business plan is the best first step you can take, and use as many of those resources because they're free. A lot of times they're giving you these resources for free. So start off on the right foot.
Absolutely. Always take advantage of what's out there and the resources that are available. We're big believers in the SBA, and definitely take advantage of Small Business Administration as much as you can. And like you said, some of them, they'll actually, go through and actually vet the whole business plan with you.
Because there's so many things you may not think about. I'm going to hire a person. What does that entail? Do I need to give them benefits? What's part-time versus full-time? What area should I open the business up? Like we talked about incorporation. Should I incorporate through the state of Massachusetts, or should I incorporate, in a different way?
Yes, in place where it's only $40 versus $500.
Right. Well, and then what's the upkeep from, from state to state? And am I going to have foreign investors? Are they all going to be, from the United States? So you got to really look at all the aspects. And if you have somebody who does this professionally, you can help put that business plan together, and can kind of come up with those questions that you may not be asking yourself right now. You just can't see that far down the road.
Absolutely. And that's it, as far as trying to figure out what makes sense, what's right for you, and how that all works. And Craig just sort of went through all of those questions right there. There's the things to be asking yourself as you're going through it and figuring out and trying to decide what makes sense from the great grand scheme of everything. And then, really the takeaways and the things to try to remember, that the organizational type impacts how you own and run your business. So you want to match the legal structure to the business needs, whether that's you're trying to get a tax break, whether it's, void liability, whether you're a management person, you want to have that continuity, or you're just, trying to take care of all the expenses. And I can remember the most common type is a sole proprietor, because it's the same as just being the owner. Partnership includes pass-through taxation and personal liability. So you're basically on the hook with everything there. And I absolutely recommend for everybody doing a business plan, so that you are understanding not only what you're getting yourself into, but you can sort of then start to realize, well, gee, this makes sense for me based on the business or what I'm doing.
Well, you brought up a good point too, Tom. What are you getting into, right? Because starting a business is almost like getting married. It's really easy to get into, very difficult to get out of.
Yeah.
So especially if you start incorporating, partners and shareholders and all those types of things. And a lot of times too, the other thing will happen is you'll start off, say, as a sole proprietor, and the business may morph into needing to be reconfigured later based on the growth and structure of the business. You may not start with one,
right.
add one later. You may decide you need to raise capital, so you need to become incorporated to sell stock. There's lots of different reasons why you may change it later on. So there's no specific clear path for anybody who just want to get started.
Right. Yep. And so then it just, this just, runs through the end of it in terms of going there, and then the conclusion, right? So remember, there's 5 different types. Talked about it: sole proprietor, general partnership, or partnership, LLC, C Corp, S Corp. And depending on which one works for you or makes sense for you in choosing that organizational type. We'll send out, we've got, not only a participant guide, but an evaluation form that we send out to every participant who comes onto the webinars, because we like to get feedback. We like to make sure that everything is okay, or you're getting the information and that it made sense for you. So we value that input and feedback from everybody, and we'd like to keep that going. This is just Craig and I when we're having more fun. This is our contact information, but like I said, we don't take ourselves. We take the information we share with everybody very, very seriously. We just don't take ourselves very seriously. So this is us when we're at our lighter and having more fun. We offer everybody an opportunity to sit down, talk with us. When we say sit down, we meet virtually and go through and ask questions, because sometimes it's difficult to ask these questions when you're in a presentation, but to have that conversation and see what makes sense for you. And we'll even take it a step further. We'll do an overview, a profile for you, and come up with some sort of a sense or a game plan of what you're trying to accomplish. And we don't do it at any cost. There's no obligation to you. We like to do that just to try to keep, like we said, help everyone have a better relationship with their money. What's coming up? We've got some save the dates for you. We're very excited about some of the stuff that's coming up. Next week, we're going to do guardianship and other concerns. Guardianship from a standpoint of things and legal documents that every family should have. But then we'll also be spending some of that time dealing in those who are dealing with family members who might be differently abled or have a disability. So that's what that presentation is going to be about. On the 12th, we're going to do, and it might get retitled. Right now, Craig and I are just calling it Diversity and Inclusion 2. But we did a previous one a month or so ago where we had some individuals from the Perkins School for the Blind in Watertown, and we were talking about accessibility and different measures that employers can take about hiring. This one will be on assistive technologies and way employers can make their workplaces more accessible for those who have disabilities. And then on the 19th, before the holidays, we'll do a little health and wealth thing, which is how to stay healthy and wealthy over the holidays so you don't get too stressed out, whether you're overeating or overspending. And we'll be off on Thanksgiving, so we'll come back after that. Any questions in the chat box, Craig?
I only want to know how was the Jack's Abbey Lager?
The Jack's Abbey Lager is fantastic. Never go wrong with Jack's Abbey.
Other than that, we're good to go. We answered everybody's questions once again. So
that's great. And we're right on time, just at about the 45-minute mark, which is what we're trying to do. So we certainly appreciate it. If you want to reach out to us, you can certainly, again, you can visit the website. That's www.aresfoundation.org, or you can shoot us an email, info@aresfoundation.org, or a direct line for us, 617-431-5045. Thank you for joining us this evening. I'm going to stop the share and say good night. Thank you all.